Alrighty, what's going on? How is everybody doing? I want to welcome everybody to this live stream. My name is Manny Q. I'm the Director of Education here at JIFU, and I'm really just somebody who's been involved in the trading space for a little over 10 years, and I've absolutely fallen in love with this industry. And I'm so excited to be able to be here with everyone today. And today, what we're going to be doing is we're going to be actually introducing officially and launching our Smartmonics strategy. This is a strategy that I have been trading for quite some time. And it's something that has allowed me and the community that I've been working with to really see some really great results. And although we know past performance is not necessarily indicative of future returns, I believe that this is one of the best strategies I have ever used over the last 10 years. And we have officially coded it, programmed it, semi-automated it, created alerts for it, and now we're hand delivering it to you. So if you're somebody that is watching this live stream right now and you're saying, listen, I want to be able to find a way to get into the market, I want to be able to make sense of the market, I want to be able to find the trading mentor that's going to help me make sense of the market, you have found yourself in the right place. And I'm so excited to be able to be here with you today. So what we're going to do is we're going to cover three things in this live stream. First, I'm going to go through a very brief slideshow. And in this slideshow here, I'm going to introduce you to Smartmonics. I'm going to break down the strategy as simple as I possibly can. And then from there, we're going to actually mosey on over to the live charts. And on the live charts, I'm going to show you how to customize the code. And after we customize the code, I'm going to show you how to actually apply the code. All righty. Meaning that I'm going to show you how to apply the strategy in the market. So this is going to be a brief introduction, a crash course, and a prerequisite to the Smartmonics Bootcamp that is about to come out in just a few days, which you guys can be a part of. And if you miss it, you can always watch the recording on my channel. All right. So with that being said, let's actually get over here and let's take a look at Smartmonics. All right. So first and foremost, again, I want to introduce the Smartmonics strategy. So what is Smartmonics, right? So the Smartmonics strategy combines the forecasting potential of harmonic patterns. Now, if you're somebody that knows anything about trading, you will know that harmonic patterns can be one of the most difficult things to use within the market because it is a complex array of Fibonacci extensions and retracements that needs to basically create derivatives of each other to be able to plot harmonic patterns, right? So it's not something that everybody fancies, but luckily, we're in 2024. We have AI, we have programming, we have technology that can do that for you. Okay, so we don't have to worry about the hard work. Okay, our scanner will automatically plot harmonic patterns for you. So it will take the forecasting potential of harmonic patterns with the widely popular smart money liquidity concepts of supply and demand trading. All righty. So Smartmonics in a nutshell, what will this strategy do? This strategy is going to focus on combining the proper market conditions for both concepts at the same time to identify pinpoint turning points within the market that you can speculate from. So this is the definition of saying when can the market potentially be at the right place at the right time. That way I may speculate on what's going to happen next. Will the market start to fail and make new lows? Will the market start to rally and make new highs? That is the decision that traders are plagued with day in and day out. So this strategy is going to essentially combine these two concepts and literally put them together right in front of you on the charts. All right. And what that's going to do is that's going to create some benefits. So what are the benefits of the Smartmonics strategy. So the first benefit is the enhanced analysis, right? By again combining and aligning the two proven time-tested trading methods and bringing them together at one singular point on the chart. So that's the equivalent of taking the original Wall Street, Elliott wave, block order, market auction theory, harmonic pattern guys with the new school, smart money, institutional supply and demand trading concept. So it's going to take both of those, put them together and put them right in front of you so you can get an enhanced analysis. So you're basically looking at the market in two different ways at the same exact time. All right. The second big benefit here is the automation. So our program will both, right? It will both plot the harmonic patterns and the supply demand zones automatically. So it will detect supply and demand zones and harmonic patterns automatically. So the second benefit is automation. You don't have to do the manual high, low, breakout, choke, mark the candle, look for the pattern, use the Fibonacci's. It's going to do it all for you automatically. The third big benefit here is identification. Identification, this means that when the market conditions are aligned at the same time and a price, when the market conditions are aligned, price rejection confirmation candles will generate. So if I have something called a type 1 and a type 2 candle, which is based on V-shaped volatility and also high-low pivot breakouts. All right, to determine changes in trends based on the footprint theory. All right, so we've actually coded that into the market. So that basically means when the market is at a supply and demand zone and there's a harmonic pattern and we're actually starting to see a price rejection, we will have confirmation candles that will automatically generate and just say, hey, listen, look what's going on here. All right. So we're going to take a look at that. And then the fourth big benefit is the customization. What do I mean by customization? Well, you can use our strategy as is, as the actual Smartmonics, or you can use it to your trading preference with any of our strategy features. Because as we actually get into this, you're going to notice we have multiple features within the scanner and you can fully customize the scanner. If you want harmonics, you can use harmonics. If you don't, you can take them out. If you want supply and demand zones, you can use them. If you don't, you can take them out. You can take both out. You can use our order flow. You can use our candles. You can really just customize the features that you like to complement your own strategy within the market. So these are the big benefits: enhanced analysis, automation, identification, and customization. So as we take a look at this, the Smartmonics strategy features are going to have 4 core features: order flow detection, multi-time frame H patterns, which are harmonic patterns. I call them H patterns. So you'll hear me use that word interchangeably. Supply and demand zones, supply and demand trading zones, and also confirmation candles. So these are the 4 core features that are built in on top of a lot of complex algorithms that are behind it to make it all work. All right. So let's take a look at these 4 core features, and then we'll take a look at the chart. So the first core feature is our order flow detection. Now this is turned off by default. I'll show you how to turn it on. And what this is going to do is this is going to identify major and minor high and low levels and automatically plot both break of structures and change of characters for you within the market. So you can actually change the setting. You can change the order flow detection. You'll have major high and lows, which will plot as these blue and red labels. And you will have minor high and lows, which will plot as these texts within the high and lows. And then you will have major and minor choke and breakup structures, which are color coded as well. So you can see swing breakup structures, you can see swing chokes, and you can even turn on the internal breakup structures and chokes if you see fit. The second core feature over here is going to be our multi-time frame H patterns. Now, this is going to identify multi-time frame harmonic patterns for you automatically, which means that when you get onto the chart, you'll be able to see small patterns and you'll be able to see big patterns. All right, you'll be able to see them all. So we'll take a look at the accuracy of our harmonic scanner, and you'll have several different abilities with this, like show the most recent, show all, show active, hide mitigated. Okay, you'll have lots of different features. So we'll take a look at that as well. Now, the third core feature here is our supply and demand trading zones. So this is going to identify higher time frame and lower time frame supply and demand zones. And these supply and demand zones, they're going to come multicolored. So you'll notice the high and the low will have two distinctive colors. On default, everything is set to red and blue. I color code everything to black and green. I'm going to show you how that looks. All right. And then you'll notice that there's going to be a yellow and a gray zone on every single supply and demand zone, whether it's a higher time frame or a lower time frame. That yellow zone represents the golden range of the supply and demand candle, basically saying this is anywhere between 50 to 618 of that candle, and that's the sweet spot. The gray area is essentially going to tell you, hey, we're now entering the supply and the demand range. In case it's a large range, you want to know when you're starting to get into that reversal range. So reversals would be imminent anywhere within one of those ranges. And then the fourth core feature is going to be our confirmation candles. So you'll be able to identify type 1, type 2, type 3 candles, and our signature candle and our signature confirmation rejection candles. So we'll take a look at what that looks like on the chart. And in addition to that, the strategy, the Smartmonics strategy will automatically generate whenever certain conditions are true. The Smartmonics strategy will automatically plot an entry fill level, an invalid level, and 3 different risk to reward levels. Now, these risk to reward levels and the stop and the invalid zone are system generated based on the average true range, the deviation, a certain pip distance, and a few other calculations. But what it's always going to do is it's always going to automatically provide a TP1 or RR level 1 is automatically going to be a 1 to 2 risk to reward based on the invalid zone. TP2 or RR level 2 is automatically going to be a 1 to 4 risk to reward based on the invalid level. And then TP3 or RR3 is going to automatically be a 1 to 6 based on the invalid level. This way you can always keep, up with your risk to reward per trade. The only thing that you would have to modify is your risk per trade to keep your trading metrics together. So for those of you that are a little new on the trading side, for those of you that are strategy hopping, for those of you that have people selling you hopes and dreams on make $1 million with X, Y, and Z strategy, forget it. They're busters. Trading really comes down to, if you have a profitable enough strategy, but it's really the economics, the financials in the trading arena, essentially meaning that you need to make sure that you have a proper risk per trade and risk to reward parameters set up in your trading plan every time you're executing to be able to increase the profitability and the survivability and the longevity of your trading career. So those are things that you should definitely look into and consult with a financial professional if you need to do so. All righty. Now, in addition to that, we are going to also provide you guys with a bonus feature. Our Smartmonics bonus feature is a custom made oscillator. All right. And I call this the supply and demand divergence oscillator by yours truly. And this is going to be a divergence detector. So this brand new supply and demand divergence detection oscillator is going to help you guys identify high and low market conditions for those of you that like the perspective with a candlestick view. So while the market is just going everywhere, you'll be able to see the oscillation of the highs and lows, and you'll get an advanced view of what the high and lows look like within this oscillator, with also opposite high and low pivot points built in. That way you can detect divergence. And when everything all comes together, you'll see you have a pattern, you have a zone, you have a condition, you have divergence, you have a candle. So you'll see the entire system will really help put the market in perspective for you. So this is the Smartmonics Strategy Scanner. I'm so excited to be able to present this. I've been working on this for quite some time, and now it's here, it's ready, it's available for you to have. Now I'm going to stop sharing my screen for a moment, and I'm going to get ready to share a new screen. And I want to let you guys know that in the events, okay, let's share my screen one more time over here. All right. Now, in the event that you are still on the rocks when it comes to trading and you're looking to further your education in the markets, okay, if that's what you're looking to do, then I do want to let you know that I will be starting a brand new Smartmonics Strategy Bootcamp. And we're going to get into the foundation of how to trade with the Smartmonics Strategy Scanner, all right, to be able to complement you inside of the markets. All right, this is going to be beginning this upcoming Monday. And if you guys want to participate in this, make sure that you reach out to one of our team leaders, so that way they can show you how to access my channel. And then if you are a direct referral from me, feel free to reach out to me or take a look at the description that this video is attached to, and there will be the description and the instructions on how you can access this scanner and how you can also access this bootcamp. And in this bootcamp, we're going to go into what is Smartmonics, the 3-step strategy system. We're going to break down in each video how to use each part of the core features. We're going to get into a pre-market training like psychology, strategy settings, trading plan, so on and so forth. We're then going to get into module 3, which is going to be the live market training. That's where we're going to take you step by step through what I do when I perform a live market analysis. So that way, we can speculate on high probable moves within the market. Then module 4, we're going to get into a bonus training, which is a price model training. All right. And this is going to train you on very specific price models that you can utilize whenever you want to enter within the markets. And then in our outro series, we're going to give an entire series recap. We're going to give a Smartmonics signature setup recap with only live examples. So we're going to show you just how to use the Smartmonics after you went through the training. Then we're also going to give you the Smart Zone, the flex setups. The flex setups are going to be whenever you want to use the supply and demand zones without the harmonic patterns. We're going to show you how to use these price models at the supply and demand zones, okay, to further complement your trading and your execution within the market. And then we're going to really end that off with the cherry on top with my victor versus victim mentality training to help you guys learn how to get that warrior mentality to really succeed and overcome anything that life in the markets throws your way. All right. Now, with that being said, it's time to actually get into the market. It's time to take a look at the Smartmonics Strategy Scanner. We're going to go through some really fun stuff. So I hope you guys are absolutely ready. All righty. So let me go ahead. Let me share my screen one more time. Let's come on over here. There we go. Give me just one more moment. And now you guys should be able to see my screen. And what I'm going to do here is now we're going to just go into full market view. All righty. We're going to just take a look at the full market view. So with that being said, let's get ready to absolutely jump into it. All righty. So guys, let's take a look. This is whenever you guys load up the Smartmonics scanner, this is what it's going to look like by automatic default on here. All righty. We're going to have our major break of structures and change of characters here within the market. All righty. So you'll be able to identify during the choke process when the market is shifting into a bullish market, followed by break of structure, 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 until it detects and determines new lows, and then gives you change of characters, followed by bearish break of structure, bearish break of structure. So you'll see that market coming down until the market turns back up. So we're going to have some major order flow automatically built in. All right, so we can determine the current direction of the market. From there, you're also going to see some of the most recent short supply zones and long demand zones within the market. So as you start to look around, you'll start to get some of the most recents, all righty, within the markets. In addition to that, you may also see an active or may not see an active harmonic pattern. So we see here the most recent pattern, which is still active, is a deep crab pattern right over here in the market as well. Now, in addition to this, we also have our supply and demand divergence oscillator. And I also use, to complement my trading, I also use our volume anchored volume profile, which is right here on the right hand side, to help me determine just the volume levels, so I know the volume high, the volume low, the point of control, and I use this to help me verify some of my zones. All righty. Now, with that being said, let's kind of just really let's just take a quick look and break this down. All righty, let's take a quick look and break this down. So the 3-step strategy to be able to use this particular, so let's just update this. All righty. The 3-step strategy to use this is a very, very, very simple concept, right? So this is based on a 3-step strategy. This is a 3-step strategy. Now, step 1 is simply, if you're going to use the traditional Smartmonics strategy, one is going to be a harmonic scan, right? Or an H pattern. All right. So we want to make sure that we have an H pattern. All right. That's one. So we can see here we have an H pattern. Okay. The second step of this 2 is to make sure that we have a supply or demand zone. All right. So we want to make sure that we actually have a supply or demand zone. Step 3 over here is to make sure that we actually have a signature, okay, a signature confirmation candle, okay? So this is the main 3 steps, the main 3 steps. From here, the bonuses, we're going to take a look at what this looks like. From here, the bonus is, what are the bonuses? The bonus is 1, or bonus A, do we have divergence? And B, taking a look at a volume spike or deficiency, right? So, we'll use volume spike for now. So we'll make sure that we have a volume spike, pardon me, divergence, all righty? And we'll make sure we have a volume spike. So these are the bonuses. Now, what I'm going to do is, you notice here, there's a yellow candle. That was the most recently active type 1 candle. We're going to get to that in a minute, but let me do a market replay. Okay, we're going to do a market replay. We're going to get out of here, and we're going to take a look over here. You know what? Better yet, let's do this. All righty. Better yet, let's do this. We're going to do a quick market replay at what this would look like if you wanted to be able to automate yourself. Okay. So right now, you see we have a deep crab pattern. All righty. And from the deep crab pattern, you'll see we have 1 supply and demand zone, and we have a second supply and demand zone. And if you look closely, you can see there's a difference in the colors. All right, we're gonna show you the settings. Pardon me. We're gonna show you the settings over here. But if you end up taking a look over here, you're gonna notice that the higher time frame is going to have a darker red, while the lower time frame is going to have a lighter red color. Okay, so if you can see this, there's actually a darker red color over there. So that will help you automatically identify the difference between a higher time frame and a lower time frame. Okay. So anyhow, so step one. So let's say we were looking at this. Oh, pardon me. This was a recent type 1 entry. So let's kind of let's just walk past this. This is already working out well. And then we're going to go up. So let's just keep going up. All righty. So there we go. So step one, we want to make sure we have a pattern, which we have a pattern. And obviously it's a bonus that we have a previous idea that that auto-generated, and that gave us 128 pips, which was absolutely amazing. But let's not focus on that because that is most definitely a distraction. All righty. So let's just take a look here, right? We want to get a pattern, a higher time. We want to get a pattern. Step one. Step two, we want to make sure we are in a supplier demand zone, and we are now in a supplier demand zone. And now step three, we want to get a signature confirmation candle. Now, if we take a look over here, you're going to notice there's type 1s, type 2s, type 3s. So let me get rid of the type 1s, type 2s, type 3s, and you're going to see that yellow candle right there disappear. So give it just a minute. We'll circle back to that. See how that disappeared? Okay, so we're going to, that's that. The signature candles are going to be black candles. All righty. Type 1 candles are going to be yellow. Type 2 candles are going to be orange. Type 3 candles are going to be purple. And type 4 or signature candles are going to be black. All righty. So what we want to see, if we're going to use this strategy on full automation, and it's just the 3 steps: pattern, supply and demand zone, signature candle. This is what we're going to want to see. H pattern inside of a zone. So step 1, step 2 is done. And step 3, we're now going to want to wait for a signature confirmation candle. And there it is. Now, right here during the signature confirmation candle, there's a few different things that you can see. One is that the harmonic pattern and the signature candle is rejecting right outside of that golden supply and demand zone. That's what we want to see. The second thing is that if we look at our supply and demand oscillator, you can also see from a candle perspective down here that we also are in a supply zone or a premium zone over here on our oscillator with a crossover to our moving average. Okay, so this is already letting us know that the positioning is really good. Now, once that candle closes officially, we're going to wait to the next candle. Once that candle closes officially, this is where we're then going to now see the entry fill right over here, the invalid level here, RR level 1, which is a 1 to 2, 1 to 4, and a 1 to 6 risk to reward automatically printed out. Now, how this works is it's very, very, very interesting. So whenever we have a candle, what the candle is going to do is the candle is going to detect. If you notice over here, take a good look. All righty. The candle is going to detect this liquidity void from the close. All righty. It's going to detect this liquidity void from the signature candle close. And it's going to do a look back, and it's going to show the previous wick. And it's going to take that previous wick, and that's where the entry fill price is going to get determined. So what this is going to do over here for you, you will have 2 options. Option number 1 is as soon as this candle closes, and if you want to be aggressive with your particular entry within the market, as soon as this candle closes, you can look to jump into the market if that is something that you want to do. Okay. Now, a more conservative entry based on the strategy and based on the code is to allow the market to, once the candle closes, to allow the market to pull back and fill out this liquidity void right over here by filling out that FVG. So this means that every single time a signature candle prints, you will have the option, okay, you will have a time delay on when you can potentially enter that market if you choose to do so. So you can actually wait for that market to come in and fill out that FBG. That's why it's called entry fill. So the fill of that candle is going to be 1.2826. From there, it's going to automatically determine the average true range of the low high, okay? And that is going to generate the very first RR level within the market, okay? And then it's going to cut that RR level in half automatically and then give you the invalid zone, or what we would call the stop loss zone. Now, remember, this system is not a financial advisor. This system is not telling you where to enter exits or take profit. The system is simply generating, okay, suggested entry fills, invalid, and RR zones based on the code, and you can use this to aid you in your trading, okay? So just keep that in mind, all righty? Now, from there, that's what that's going to do. So if you take a look, and let's say you end up putting in a short right over here, you'll see that RR level 1 is going to be 66 pips, and this level should be cut in half, and it's around 33 pips. So that means that RR level 2, 1 to 4, should be about 99 pips. Actually, it's actually 4 times the stop. So 30, 60, 90, 120. So this is 130 pips for a 1 to 4, and then it goes all the way to 200 pips, essentially for a 1 to 6. And it will determine that for you automatically. So this is, in a nutshell, if you're going to use the strategy for what it's meant to do without any customization, this is the 3-step system in which you can follow. All righty. Now, as I get ready to remove these drawing tools right over here, something that I do want to show you. So let's go ahead and kind of let that market play out. And then you'll see, we had a very, very beautiful run in that market all the way down to 4, and you'll see the structure stood bearish, and it just continued all the way down to 1 to 6, and it was just absolutely amazing. So let's go ahead and just bring that to real market time. All right, so that is the entire strategy in a nutshell. Now, if you want the system to only alert you, because next we're going to get into the customizations. So if you want the system to only alert you on signature, long and short confirmation candles on the Smartmonics code, if you go over to the add alerts, you'll notice right over here, you have the any alert function. You'll have buy alerts, sell alerts, harmonic pattern alerts, signature buys, signature sell, and any signature. If you choose this alert, which says any signature, and you choose to do this, right? So you can put a, you can name this like Smartmonics, signature. Okay. And you can do that signature signal. You see that? So if you go and you create this over here, what's going to happen is the TradingView will only notify you whenever a confirmation candle gets generated based on H pattern in the zone, okay, with a signature confirmation candle. So only when that happens, then you can get an alert. So you guys can choose to fully do that. And that is something that I absolutely love. Now, from there, let's actually start to break apart the strategy now. All right, let's actually start to break apart the strategy and show you the different features within the strategy right over here. All righty. Now, so what I'm going to do now is I'm going to actually open up the settings, and you can see everything right now is really just customized to red and blue if that's what you like. Now, me, I'm a little more on the stylish side, so I have all mine changed up. So what I'm going to do is I'm going to show you what I do over here. So the first thing that I'm going to do is I'm actually going to change my charts, and I call this my flex black and green. So if you ever want to have the chart looking a duplicate to mine, you can set it to black and green, body, border, wick over here, which is that forest green. Okay, you can go over to the canvas. You see I remove all of the lines in the back as well. Title logo, I get rid of most of my values on here. I really don't need to see all of the values declared all over the screen. I go to symbols, and this is kind of how everything looks for me over here. So you guys can rewatch this, stop it, play it, do what you want to do. But you can do this if you want to have your chart identical to my chart over here. So I don't have a lot of numbers on the side. I don't have a lot going on the screen. I just have a nice, clean screen with a customized background right over here, which is F7, F7, F7. That is the color of my background charts. Alrighty, so let me come over here. Let's change this chart color. Alrighty, we're going to change that up. And the next thing that I'm going to do is I'm going to go into the code, and now I'm going to kind of just adjust the code to the way that I like it. Alrighty, so you see we have a lot of stuff going on. I'm going to show you what this means, but let's kind of come down here. Alrighty, so for my bullish colors, these are my harmonic patterns. Everything is bullish. I like it forest green. And everything bearish, I like it the fourth from the final on black. Alrighty. My higher time frame zones, if it is a long zone, I will set that on a dark green right over there. Yep. And then if it is a bear zone, I'm going to set it on a dark black right over there. And I'm going to do the same over here. All right. This is long and shorts. So this one here is going to go to dark green, and this one's going to go to dark black. Okay, right over there. There you go. That's my higher time frame zones, my higher time frame supply and demand zones. And then in my lower time frame supply and demand zones, I will set the longs to a little bit of a light green right over there with a lighter black over here, which is the fourth from last on all of those zones. And then now I can have a nice color differentiation. If something is really dark, I know it's higher time frame. If it's really light, I know it is lower time frame. All righty. In addition, as we start to come down, I also start to change the chokes and the breakup structures. So I like to keep everything over here to green and black. So anything that is bullish, I put green. Anything that is bearish, I put black. So we're going to come over here. We're just going to start modifying all of this over here. So let's start modifying. Perfect. This is actually supposed to be the fourth from black, so it's not too dark. Okay. All right, there we go. Let's come down. Now, you could also have zigzags if you want. If you decide to put the zigzags on, we're going to go through the settings, but if you decide to put the zigzags on, the zigzags will help you detect the zigzags will help you detect price models and things like that within the market. It also follows the order flow and the structure that you have. I'm going to leave that off for now, which you can fully customize. The zigzag labels now, which is the order flow within the market. So if you want to have that order flow on right over there, you can turn those labels on. So anything that's a major high, I'm going to keep those black. Anything that's a major low, I'm going to keep those green. Major highs, I'm going to keep these black. Major lows, I'm going to keep those green. That way everything is nice and customized. We have a rule-based bar over here. So once we're in the live analysis room, we're going to be able to customize our bar and set all of our trading rules, our analysis rules. So you can have that right over here for you. Okay, so I have everything, you know, kind of hidden over here. So we're going to uncheck that. And then we have all that going on. And then as we go over here to styles, if I have some of my type 1 and type 2 lines, which are all color coordinated and organized, I'm going to do the same thing. I'm going to keep all of this black and green and black and green. My long X, my short X, I'm going to keep these. Bullish is going to be green. Bearish is going to be black. I'll show you what those mean in just a moment. And then we even have like upper bands and lower bands. If you ever want to look at the system and see the Bollinger Bands within the system, you can fully customize these things as well. So the top band, I will put dark, and then the lower band, I will put a little bit lighter. For the upper band, I will put like a darker green, and then the lower band, I would put a lighter green, or you can go even lighter. It's going to kind of be your preference in terms of what you want to do. And then we have some shadows. So if you want to create some shadows within the market, you can adjust those even further. All right. So if you see here, I now have my entire system set to black and green. This is kind of like the way that I like it as I'm using it in the market over here. All right. Now, what we're going to do now that we've customized the colors, I'm going to now rip apart the strategy, and we're just going to kind of look at everything piece by piece in terms of all of the core features. All right. So let's go through all of the core features, and we're going to start with the first core feature, which is the actual order flow within the market. So let's take a look at the order flow. And what we're going to do is we're just going to turn everything off, right? Let's go to styles. We're going to turn everything off right over there. We're going to go to inputs. All righty. In the inputs, we're going to shut everything off. We're going to shut off the higher time frame zones. We're going to shut off the lower time frame zones. We're going to shut off the deviation bands over here. Let me just leave that on. Sorry, upper band, lower band. There we go. All right, we're going to shut off the band. Yeah, there we go. We have pretty much everything shut off. And what I will do is I will now put on the zigzags. Let's take a look at the zigzags. And I will also put on the minor and the major break of structure. So I'm going to put everything on over here for you. Now, this is going to be for training purposes whenever you guys are looking at the market, and then we're gonna hide the active patterns. All right. So now the only thing that we're going to actually see on this chart is only the order flow. So if you're still somebody, you want to learn how to trade with the order flow, you can do that. And you're going to have something here called the flex flow pivot period. If you want to change this and you want a less aggressive high and low, you can change this to something higher. Like let's say it's a 21. Let's go ahead and watch how these high and lows, they change just a little bit. You see that? Let me put it to a bigger number, like a 34. You're going to see we're going to have even less high and lows over there. You see how that changes? If you want something super aggressive, you could put it down to a 5. I like to use the Fibonacci ratio numbers. So 5, 8, 13, 21, 34, 55, 89, so on and so forth. All righty. So whatever you change that flex flow pivot period, you're just going to get a series of highs and lows within the market. Now, I have mine set on 13. So let's leave that on 13. Let's kind of take a look at how this looks. So what this is going to do for you is as you're coming down, it will determine a major low and a major high. That's what those labels are for. All righty. So if it breaks a major low, it's going to then start to create, it's going to automatically plot major break of structure to the downside and start to create another major break of low. Now, as you see here, you'll start to have minor higher low, minor lower high because it's lower than that high, minor higher low because it's lower than that low, minor higher high. And then you'll start to see as the market starts to break that internal structure, it will legitimately just give you all of the order flow right here inside of the market. All righty. So let's take a look. It will give you all of that order flow within the market. Let's actually turn this to red. It's going to give you all of this order flow in the market, all built in for you. And as you see, the major and the minor chokes are whenever the swing highs and the swing lows are broken. And whenever the market is trading in between a swing low and a swing high, it's going to give you the major and the minor chokes and the break of structures, right? So you'll see here, you have no major break of structure to the downside. Why? You have a major break of structure. You have no major break of structure to the downside because the market never broke below this low. It started creating internal internal highs and internal lows, and the market started following those internal highs and those internal lows. So you can use this to help you really just detect the overall order flow of the market. You see how the market is pulling back. Over here, you're getting that internal choke, that change of character that's letting you know that the market is starting to break to the upside from this entire move. And then you have a major break of structure giving you the major upside. Then you're pulling back, looking at the market, right? Before, obviously, in this example, going into a consolidation. So this is all of the major and minor order flow. Now, what I do over here is if you want to shut all of it off, very, very simple. You can take off the zigzags. You can turn off the labels if you want, and then you can individually turn off the major and minor chokes and break of structures. So anything with a dashed line is a minor. So if you want to do that, you can go ahead and do that. And this is what I mean by customization. You see what I'm saying? So you can really customize the system the way you want to customize it. And this is how I like it. I like it where I just see major change of characters, major break of structures of highs and lows based on my pivot period. All right. So that's how I keep it super, super clean. Now, so that's the order flow. That was the first major feature. Now, the second major feature is the actual harmonic patterns. So if we come over here, you're going to see something. This button here says hide and show active patterns. So if you have it clicked, it's going to show the most recent pattern here within the market. All righty. So let me shut this off and put this back on. All righty. It's a monster code. So sometimes it does that. All right. There we go. So now this is going to show the most recent active pattern. All right. The most recent active pattern. So as long as you have this on and you have everything checked, it's only going to show you the most recent active pattern. You have something that says delete historical H patterns, which means that if there was old patterns like this, which they created a low. So you'll see over here, see how you have this Gartley and then it broke below. This is now a mitigated pattern. It's gone. You see this butterfly, it broke below that low. It's now mitigated. It's gone. You see that cipher, right? The cipher is gone because now there's a new active pattern. All righty. So if you want to start to see some of the older patterns, you can do that. And then if you want to see all of the patterns, just uncheck both delete historical entries and delete historical H patterns. And as this bad boy begins to load up, what's going to happen is, let me come to another chart. Let's go to USD CAD. What's going to happen here is you now can see all of the harmonic patterns within the market that our harmonic pattern detector has found. And you see here, I have labels for every single one. So you can literally see every single harmonic pattern that our scanner has ever printed. So you can use it, you can back test it, you can do whatever you want in the market. All righty. Now from there, let's kind of get rid of all of the harmonic patterns. And now let's go take a look at the zones. All righty. So we have two types of zones. So as we start to scroll down, and mind you, if you want to customize your harmonic patterns, you can come here, you can customize all of your patterns. Different patterns show up on different colors based on different pivot periods or different time frames. So just keep that in mind. That's why there's 4 different types of patterns. You're going to see the most common patterns are going to be the black patterns. They're the smallest. And then the largest patterns are the green patterns. All righty. So now as we come down over here, you're going to see higher time frame zones and lower time frame zones. So let's say you're like, you know what? I don't want to, I wanted to use order flow. Now you know. Maybe you're somebody that only wants to use harmonic patterns. Now you can do that. Maybe you're somebody that just wants to use supply and demand zones. So what we could do is now we can check supply and demand zones. Now here, you guys are going to see that these supply and demand zones right here are based on the 12-hour period. So if you do not have the 12-hour set on your charts as a custom interval, this will show up as blank. So what you're going to need to do is on your actual trading view, where the time frame is at, you're going to have the ability to open this up. And at the very top, there's going to be something that says add custom interval. And over here, this is where you can now put the 12-hour interval. All righty. So make sure that you have that set in and added onto your time frame. All righty. So our higher time frame zones are based on our on a 13 period based on the 12-hour. Okay, which means that if you actually go to the 12-hour time zone, this is the time zone that the supply and demand zones are plotting from. Okay, and you can continuously go down and it will stay on these particular zones. So if I go from a 12 to a 4, you'll see over here, I'm going to get these higher time frame zones. Okay, and if I go down to a 2 or a 1, you're going to see that those same zones are still there. The zones might change in size only because the candle on these, as the time frame goes down, it's going to use the same high, but because the candle is smaller, the zone might look a little bit smaller. So that's something that you want to be able to keep in mind. There's no way to keep the zone the same size, but it will plot from the same point in the market. All righty. And look, you can see right over here from that demand zone, we had a beautiful type 1 with a fill, giving us just a massively beautiful, beautiful drop within the market. Okay. Now, if we come over here, the second time zone is going to create more flexibility. All right. The second one, if we turn it on, this is based on the 24 period and it's set on your chart. So the reason why this is now set on your chart, now you're going to see some extra zones are going to pop up. Now this is set on your chart because if you want to go all the way down, like let's say to a 5-minute time frame or something like that, you'll be able to legitimately go down to the 5-minute time frame, and this system is just such a beast. I'm telling you, you'll be able to go down to the 5-minute time frame, and then you'll be able to. I mean, it's just amazing. You'll be able to go down to a. Have you guys noticed the pattern every single time we change the time frame? It's just like they hit. You know, there. It's not. Nothing is perfect. It's a code, but it works really nicely, and I'm always making modifications to it. All right, so you can even use it on a 5-minute time frame. So you could do 5-minute patterns, 5-minute order flow, 5-minute zones, 5-minute confirmation candles. All right, so now you can really just start to customize, the zones that you want. All right, I feel like that creates a lot of flexibility, and obviously you have the ability to declare if you want the zones on or off. Right over there. These are the candles for invalidating the zone. So if 3 candles close outside of the zone, the candle will disappear. It's now considered invalid. If you want to add more zones, right? You want to show 2 of the most recent bullish, 2 of the most recent bearish for both the high and the lower time frame, you can increase that. You know, if you want to get crazy, you could put 3, 3, 3. I mean, I don't recommend it, but you can do that and then let this kind of load. And now it's just going to show you more and more and more and more zones in the market. You see that? So you'll get dozens of different zones that's going to display within the market for you. So the reason why we keep it on 1-1, just so you know, is because the system is very, very intuitive, right? So that just basically means that if you keep it on 1, you will only see the most recent. So as an example, if this zone down here invalidates, right? If it mitigates the zone and it invalidates and it closes, the next zone that's here is going to automatically plot for you. Okay, it's going to automatically plot the next zone. Even if you can't see it, it's going to automatically plot the zone. Just because it's not plotted doesn't mean it's not considering it. It will automatically plot it. So if you leave everything on 1, 1, 1 across the board, this will just give you the most recent current time frame high and low supply and demand zones and the 12-hour supply and demand zone. So you kind of have like a really good idea of where you're going. Once you really start using the strategy, you want to see, am I trading off of a higher time frame, lower, higher time frame demand, higher time frame, supply. That all has to do with the strategy. All righty. Now, from there, from these zones, all right, that's the second thing. That's the third, right? That was the third. And then now the fourth and final core feature is are our type 1, type 2, and type 3 candles. So what are these type 1, type 2, and type 3 candles? So the type 1, type 2, type 3 candles, oh, I didn't even realize this. Look at this one, USD CAD. Here's another one. What a beast, right? So what this is going to do for you is this is going to then automatically generate these candles. Now, these are my signature candles within the market. So type 1s are going to be yellow candles. All righty. And the type 1, type 2, type 3, they do not consider harmonic patterns. Type 1, type 2, and type 3 only consider supply and demand zones. So that means that if you don't want nothing to do with the harmonics, with the H patterns, just leave this button unchecked. You'll never see a harmonic pattern on the charts. Okay. And then you will see type 1, type 2, type 3s that automatically trigger from a zone. So what the candles are supposed to do is, as you guys know, anytime that we are looking at the market, okay, anytime that we're looking at the market and the market's making a move, when the market runs into some kind of supply zone or premium zone or like resistance, depending on whatever your style is, okay, once it runs into a zone, most people are looking for like a wick entry. They're looking for that, like guaranteed, like it's going to hit this and it's going to bounce and that's it. Like I'm all in. That's one type of an aggressive trader. Another type of trader is the indecisional person. That's where it comes to the zone and then they have no clue what it's going to do. They're like, should I buy it? Should I sell it? Is it going to do this? Is it going to do that? Is it going to do this? Is it going to do this? Is it going to do this? And then by the time they're ready to get in, they get in when the market's low, the market pulls back, and these guys are a mess and they're all over a place. All right. Now there's another type of trader, which is the conservative trader. I'm more of a conservative trader. So what that means by conservative, it means that if the market runs into a supply zone, right? So as an example here, right, we can see here that this market rallied into a supply zone right over there. And once it hit that supply zone, I'm not looking for a wick entry. I don't trade like that, right? So I can't tell somebody to do what I don't do, and more power to the people that can do that because their power and their precision is amazing, but I don't do that. I'm a confirmation trader. A confirmation trader simply means that I am waiting for the market to give me some type of rejection. I want to see some type of price rejection. I need to be able to see price rejection. And once I see price rejection from this zone, I determine if the price is getting rejected from that zone by a signature candle. Okay, so my 3 candles are called 1. Let me show you guys what they look like over here. All righty, so candle 1 is known as the V-shape recovery candle. All right, this is a V-shape recovery candle. Okay, so there's lots of different conditions that go into determining when the candle generates, but I'll just let you know the psychology. It's a V-shape. That simply means that you have the market moving in to this, to that area very rapidly. Okay. You have the market moving into that area very, 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 very rapidly. Okay. And then you're seeing a volatile move, usually caused by some type of engulfing or 3-line strike or something like that. So this is what I call a V-shaped recovery candle. We have a lot of volatility going into a zone, and then we have a pretty fast move coming out of the zone. So whenever you see the V-shaped candles are yellow, okay? This is what we call type 1 candles, and they are automatically set to yellow. Those are the display type 1. The type 2 candles, all righty, I don't know if we'll be able to go through the market and really find them, but the type 2 candles are ORANGE, ORANGE are going to be orange. This is what I call the breakout candles. All righty, what is the breakout candle? So the breakout candle, this is when the market comes into the zone. These are some of my favorite ones. All righty, type 1s are more commonly occurring. Type 2s are my favorite. This means that the market is going into the zone, a lot of volatility, and then it starts to slow down and gives you a very, very small consolidation. And then there's a breakout within the market. There's a very small pivot fractal breakout within the market. All righty. And whenever there's a small pivot fractal breakout within the market, this is what plots a type 2, right? That is a type 2 within the market. All righty. Now you're going to see, and those are declared as orange. Now you're going to see a type 3. So what is a type 3? A type 3 candle are going to be the purple candles. All righty. And these are very simple. Okay. Type 3s are going to be the purple, PURPLE. These are going to be the purple candles. And these are simply going to be a type 1, pardon me. Okay. These are going to be a type 1 and a type 2 together. So if both a type 1 candle and a type 2 candle trigger at the same exact time, the candle will then turn purple. And then that is basically what a type 3. So a type 3 is just like a type 1 on steroids, a type 2 on steroids. They're both of them together. I love type 3 purple candles. Okay. And these and type 1, type 2s, and type 3s, they're only going to plot from the supply and demand zones, right? So if you take a look over here, you'll take a look at the supply and demand, right? The market came into the supply and demand zone, right? So you see here, this is where the fractal breakout was at. So that should have been a type 2. But what happened was a type 1 generated in that zone. So we ended up getting a type 1. It declared as yellow, candle closed, entry fill was generated, and then automatically gave you 1 to 1, 1 to 4, 1 to 6. And don't forget, this is system generated. So if you're somebody that wants tighter entries or tighter stops, you can always move your stop above, right above the wick of the actual type 1, type 2, type 3 candles. You can always do that, and that will change it. So instead of in this example, instead of this stop loss being 30 and the target 1 being 60, if you put it right above the candle, that would have been 16 with a 61. So 1530. So that means that by the time the market actually came back and filled, which it did on the second candle, and came back in, that would have been an automatic 1 to 4. All right, automatic 1 to 4. This would have went down to a 1 to 8. And then if it went all the way down to 3, it would have been, well, actually, no. 60, 120, 16. That would have been like almost a 1 to 10 by the time it went down over here. Let me how many pips is this? 120, yeah, that would have been a 1 to 10 by the time it came down there. All righty. So if you do your invalid zones a little bit different, again, more power to you, and then you can do that. All right. Now the signatures, and this is really the final part of today's training. The signature is going to be either a type 1, type 2, or a type 3 from a supply and demand zone with the harmonic patterns. So you will only see a type 3, which is, and actually, you know what? I actually have to change this because my down candles are already black. So this should actually declare as a type 3. So let me change my type 3s to, what color should I do? I kind of have all the colors. Let me kind of do like an ice color right over here. Boom, right? Market is icy. All righty. So there we go. All righty. So you'll see over here, see how it generated that ice because the strategy is ice cold, baby. All righty. So there we go. And then right there, you will now see a type a signature candle. So again, this candle will only declare when there's a harmonic pattern in a zone forming a type 1, type 2, or type 3, ladies and gentlemen. All right. So this is the entire strategy in a nutshell. All right. If you guys want to come here and back test the system, what you could do is just come here, right? One of my favorite pairs, obviously, I'm in the New York session a lot. So this is what I do. Now, I'm going to let you know this. My two favorite time frames that I personally analyze this market from are the 30-minute for lower time frame entries and then the 2-hour for higher time frame entries. I just want to let you know that those are my favorite two time frames. But there's so much that you can do, right? A part of our training, you're going to learn how to analyze higher time frame zones from the 12-hour, and then you're going to learn how to start shaving down the time frame from 12 to 4 to 2 to 1 to 30. And we're going to show you, how the market, how the price can reject that, in different time frames on different candles from zones. So there's so much you're going to learn in the bootcamp. This introductory training doesn't cover anything really. Okay. But if you ever want to really take a look at the market, watch this. I'm going to show you this. Then we're going to get ready to close it out. If I click delete historical entries, okay, I'm going to click delete historical entries. I'm going to uncheck historical patterns. I'm going to uncheck all of this over here. And now what's going to happen is we're now going to see every harmonic pattern. We're going to see every single time a confirmation candle was generated, whether it was a type 1, 2, 3, or a signature. So take a look, right? And you'll see all of them getting lit up. So here goes on GU, 2-hour, my favorite time frame. This was the most recent type 1 that gave us over 60 pips. This signature right over here from that candle close to the low, 197 pips. Here goes another type 1 right over there, giving us 140 pips. Look at this signature right over here, giving us 109 pips. Another signature would have filled to that low, another 90 pips over here. Let's just kind of take a look. Here goes a signature. This one wasn't a good one. Do they all hit? No, they don't all hit. But if you take a look at that black entry line, okay, filled in that entry line, and it still gave you 45 pips before that market turned around. Now, hello, somebody. This, if you are trading, and that was a live market, you could have easily had plenty of time to move your stops in profit because that was 16 hours of straight profitability. All righty, let's take a look. Right, same thing. Well, this one was a straight loser. Look what happened over here. That came for the fill and came straight down, hit a 22 pip stop. I mean, after all of these other trades with proper risk to reward, you see what I'm saying? Here's the next one. The next signature over here didn't quite make it to the target one, but that one gave you 63 pips. Look at this type 1 over here, candle plot back into the fill. I mean, before that radical pullback right over there, you had a beautiful 194 pips. Like, guys, you could just keep looking. Here goes another signature right over here, giving you another beautiful 100 pip run, right? Look, here goes another signature right over. Look, well, this one kind of went straight down, hit the stops. Look at this other signature, close, picked up. Look at the wick entry on that liquidity fill and bringing you straight up to target one for 65 pips, giving you a full swing of 133 pips to RR2, right? Nothing was declared over there. Here goes another type 1 over here with a beautiful wick fill going all the way down to the bottom. And guys, you could do this again and again and again. You could take a look at gold. This was really built out for the USDs. So you want to use this on gold. You might want to use this on the USDs. I love GU. I love EU. These are the primary pairs that I'm trading. But guys, you can come over here and you can kind of stress test the system and you can do whatever you want over here. All right. You can do whatever you want in the market. The only other thing that I'm working on is I'm working on these brand new. They're called long X and short X. So let me show you what this looks like right over here. Okay. these long X's and these short X's, these are going to be additional places that you might find an interest when it comes to potentially entering within the market. Now, you'll see that they're not all perfect, but you'll see some at some highs and lows. So what we get to do over here is, here's an example. So let's say you're trading off of that low. Let me try to go to EU on the 4-hour. Let me see if we had something over here on the 4-hour for EU. All righty, right? So you had a signature EU over here followed by an X, right? So before the market made it down to that zone, let's say you were trading off of this higher time frame zone and you missed the entry up here. These X's are going to give you additional places where you may want to enter. So if you see an X, what you're going to want to do is you're going to want to go to the previous fill in that zone, and you're going to want to look at that as a potential entry. If you see an X right over here, you're going to want to go to the previous candle to the body and create a fill, right? So that could have gave you another entry right there in the market. All right, come into the downside. You see another X, you go to the previous candle or the previous fill right over there, you draw it up, and then that could have been another fill to take you down. Here goes another X. You see that X, you can go to the previous wick, right? And then draw out the fill, okay? And then you can get another area to start taking down inside of the market. So these X's, so that bullish X means that you're coming off that 4-hour demand zone. And as that market is coming up, if you miss that first one and you see this X, then what you can do is you can go to the previous fill right over there after this candle closes. So once that pulls back right over there, even though, obviously this came down a little bit, but look at it going up, that could have helped you determine another entry within the market over here, giving you another 26 pips. And we'll show you guys how to use this in combination with our supply and demand divergence oscillator. This is a whole nother training, which we will teach you guys on our bootcamp and on our session, how to use volume profile. We will teach you how to do that on our session, ladies and gentlemen. But this, in a nutshell, is the fully automated Smartmonics strategy system. I hope you guys absolutely love this. All right. Again, I want to thank you guys so much for showing up to today's training. We're going to get ready to conclude this training at this point. So if you guys absolutely love what we have going on, and you guys want to be able to access this strategy, this training, you want to be able to get in the live rooms with me where we're performing live market analysis. If you want to be able to get access to this strategy, the scanner and this code, it's going to be exclusively here at JIFU. I am currently the director of education at JIFU, a company that I partnered with a short time ago, and we are making amazing strides in the technology and the educational space for individuals that want to be able to learn how to earn within the financial markets. Now, I am not a licensed financial expert, regulator in any type of way or form. What I'm going to do is I'm going to perform educational insight for you. I will show you guys how to use the strategy in the live markets. I will perform live market analysis and give you my take and my perspective on where the market is going. And I will also provide you and grant you access to this particular code right over here. Now, this strategy has already been proven to help so many different type of people. And the question is, will it help you? Will you be the one to knuckle down, double down, and get ready to really excel? Is this going to be the season where you guys are going to submit to a coach, learn how to trade, dedicate at least an hour or two a day to these markets? That way you guys can learn a skill. Remember, guys, the reason why we develop these strategies is because there's this old quote that says, if there is $1 million buried in the ground and it's 6 feet underground and you need to get to it, how are you going to get to it faster? With your hands or with tools? That's what this scanner is. This scanner is the tools that you're going to need to be able to get to the digital gold. Now, remember, past performance is not necessarily indicative of future returns. Trading does involve risk. You can lose all of the money that you invest within the market. So you want to make sure that you're always exercising discretion when executing within the market. You always want to be able to utilize proper risk to reward. And those are tools and things that we can give you. So if you guys want to get access to this, reach back out to the person who has referred you to this video. They will show you how to be able to get involved with our community and show you how to get access to this, our scanner and our boot camp, as well as a huge, amazing team that works with us over here. All righty. If you have found me and you're watching this video and you're connected to me, there's going to be a link in the description. There's going to be some instructions that you can follow to learn how to get involved with me and our company over here. So one more time, again, my name is Manny Quinones. I want to thank you guys so much for showing up to this live stream. I hope you found it valuable. I hope you guys are excited. And I just pray to my God, Jesus Christ, my Lord and my Savior. And I pray for blessings and abundance to be able to be upon you. May the Holy Spirit be upon you and aid you and guide you moving forward. All right. So guys, thank you. I love you. God bless you guys. And I will see you guys on the other side. All right. With that being said, everyone, have an amazing day. My name is Manny Q, and I'll see you soon.